For over 2 months, the crypto market's been playing a game of cat and mouse, or as we like to call it here, chicken and mouse. We're seeing money flow from USDT into Bitcoin, Ethereum, and stronger altcoins. And then when we hear about the 30th time there's going to be an altcoin season, that money rugs the market, returning back to Bitcoin, Ethereum, and USDT, and of course other strong altcoins as well, as we can see from the charts. Now, as the charts are suggesting, things could be changing, but there are a few roadblocks to get through first, and not all altcoins are going to make it. That has been the key to this entire cycle. There's only been a select few that have been making it through each of these storms. Each time we see money flow from USDT into the market, then back into USDT. So stick around, hit the like button if you haven't already to home a macro cycle analysis. Now, of course, it gets annoying asking for subscribes, and I hate hearing it watching other videos, but if you do find value, maybe share the video around with other friends and family that are looking to invest in the markets. Hopefully, it can keep them safe and investing longer term, not just for the short term here. So with that in mind, let's have a look at what's happened to Bitcoin over the weekend as we closed out a new week. We have the interest rate announcement coming up this week. Plus, there have been new all-time high prices for the stock markets, for the US stock markets, new all-time high closes on the weekly charts. So things are really pushing along as we've been suggesting for quite some time as I find my 18-year cycle. So we'll get to that in just a moment as well. But first up, Bitcoin and a couple of the key levels we've been watching on the short term into the medium term was the $116,000 level on Friday. We got there. Bitcoin got there, that is, to a close of $116,088. And then over the weekend, it just slowly faded. And by the time Bitcoin closed out the week, it closed just under the 50% level. So that's not overly concerning at this rate because, as we've covered, we're watching the 3 red bars, which typically suggest there is a correction to come. Just how deep that's going to be is obviously the next question. But longer term on the macro, it doesn't look like we're seeing any signs of a major breakdown. Of course, you keep hearing about people saying that this is the top, or that was the top, and that we've got a lot further to fall past 170 and 90 and whatever other levels they're looking at, but the data isn't suggesting that. The charts haven't suggested that. And who makes up the charts? Well, investors. And so the smart money, in my opinion, isn't saying that this is a time to be concerned that the market's going to collapse, but there could be some signs of a bit of a slowdown here as we lead into first thing this week, that interest rate announcement. So the first thing was the slight rejection off the 50% level. That was at 116,000. It also closed underneath and rejected on the 7-year resistance line. So you can see this white line here from the 2017 top to the 2021 top, and basically had a few weeks above it, went back under, and then for this week tested that level. As we've been saying, closes above 116, consolidation above 116, going to be stronger for the bulls. Underneath 116, but still above around 107 to 112, still in a good position because you're still above the longer term 50%. So that's the level there. So this is the big line through the middle, around 99. We use a range between 98 and 100, but for a simple number there, look at 99,000. So anything in that zone is still okay. If Bitcoin breaks down from the lows here at 98 to 99K, you can see it right there on the chart, that is where things can get a little bit dire for this cycle. That hasn't happened yet. We're just seeing short-term, very, very short-term weakness as it closed underneath 50%. Now, the second thing to note as we run into the interest rate announcement this week is that Bitcoin was not able to get back above the price of the 22nd of August. So it's something that I haven't heard anyone else speak about this week as we run into the interest rate announcement in less than 3 days. Here it is here, 2 days and 17 hours to go. On the 22nd of August, Jerome Powell spoke at the Jackson Hole Symposium and essentially said that the changing conditions around the economy may suggest that we could see an interest rate cut. Only the day before did he say there was going to be no interest rate cut. So there was a few more data points that came out, a few more economic announcements through that period. Here he said no rate cut. Then he changed his mind the next day and said interest rate cut. The market's pumped. We saw that for Bitcoin. We saw it on many other alts and the stock markets as well. Take it back to the 22nd of August. Right around this period here, ran into new all-time highs. And from that point, the market basically sold off. So there was no more follow through after Jerome Powell said, we're going to get a rate cut. Now, since that time, and we're coming up to a month since that point there, 24 days, the market has found a temporary low, a local low. This is Bitcoin, of course, rallied, and then found its way higher. So it's just basically been grinding into this 50%, the 116K, the 117K, the top here at around 118K, lots of resistance to get through for this period. Now, it hasn't got through the resistance, but it's not doing a bad job to hold the line either. We haven't seen extreme greed take control of the market on the way back up. We've seen a couple of days in greed. Majority of the time, it's touched on fear and basically stayed around neutral. So with those readings, it doesn't, to me anyway, it doesn't suggest that the market's going to fall back into some sort of deep depression, because what you would expect for a bear market, for a major collapse, is that on this rally, as the prices have been increasing from 110 to 116 on this rally and leading into the interest rate announcement, which the majority of people have expected to be extremely bullish because the rates are getting cut, more liquidity in the market, you would expect for a big correction to come, that this typical top into the run into this local top would be extremely greedy. So a lot of the market expecting higher prices, and you're just getting a major FOMO into this move, which would be a lower swing top. So that's where the price has got. It's lower than the all-time high. It's lower than when Jerome Powell talked about it. And right now it's basically just trading around similar prices, 116 to 115. So you would want to see extreme greed, lots of people trying to think that they're front running the market into this announcement, but of course could be a buy the rumor, sell the news. And then of course the market sells off. And we haven't seen that extreme greed as shown with the market sentiment on the crypto fear and greed index, and also the FOMO finder index as well. That's basically been right around neutral. You can see in this yellow yellow part of the chart itself between -1 and 1, that is basically a good place for the market to be in. Many lows form around the purple and the pink or light purple, and then a lot of the tops, major tops, form around the fear, around this orange and red. The other thing that we haven't seen is huge upticks in the Bitcoin ETF, which generally coincide with local tops in the market. The most recent one we saw was back in July. Huge numbers coming into the top. So in July, it ran to about 1.1 billion in the ETF flows. The next day, pretty high as well. I think that was some of the largest days in history. You had to go back to the next previous top there of November, which is around another significant top. So like you can see with November, ran into this peak and didn't really go anywhere. And then we had the correction. And then July as well was through this period, ran into that top. And of course, we haven't gone anywhere since that point for the last 2 months. So that's July 9, 10, 11. We're basically roughly around that same price. The market's been trending sideways. So although we're looking at the short-term signals, that it seems like the market still needs more time to consolidate, there's really no signs that the market wants to collapse from this point either. So the daily's looking all right. The weekly, although we ran up, hit the 50%. We have our 3 red weeks. We have our 3 weeks down as well, which is this bar, and this bar, lower highs, lower lows. Could suggest that we are, Bitcoin's wanting to test the 112 level, and then we'll see whether it wants to come back and test the 107. What invalidates this is if we see a nice rise up this week, taking out that top on the daily here, so roughly around the $118,000 high, and then some consolidation above those levels. So bit by bit, working its way into a position of strength, even if there is a flush out over the next couple of days and a move higher. Things are still looking relatively on track here as we run into this next Fed announcement. So that's coming up on Wednesday for guys in the US, and of course Thursday morning here in Australia, the expectation is that the interest rate will be cut from 4.5 to 4.25. There is less of a chance now that it's going to be double, like a double rate cut down to 4%. But either way, it seems like the market is expecting a 100% chance of an interest rate cut. Now, the indicators that I've been showing you can find on your TIA indicator suite, Bitcoin ETF flow, Ethereum ETF flows that I'll get to with Ethereum in a sec, which is also showing significant signs of a possible pause or further move down, even though we closed above 50%. But one thing at a time, we want to look at the Bitcoin predictive cycles for September. Now, the cycles here, looking at the last 5 and 10 years, there was a comment that came up. People have asked, why are we looking at 5 and 10 years when most other people only look at a 4-year cycle? This is what Gann looked at. 5 and 10 years are significant cycles. More importantly, 20 and 60 years, but of course, Bitcoin hasn't been around that long yet. And the 5 and the 10 years are some of the next best cycles to look at. Now, the composite, combining these two cycles from 2020 and 2015, Bitcoin has been tracking relatively close to these cycles, which has given us a relatively good roadmap for 2025, especially coming out of a significant drop that we saw in April. The last couple of cycles, you saw it around March with a higher low in the red line here. Also an important time to watch. Higher lows are a sign of strength coming out of those lows. So here we are, September, potentially a bit of a consolidating move, kind of annoying to keep saying, but you can see here, we're coming up to some sort of higher low forming. So if we zoom in on that, you can see you've got a low and then a couple more lows here. They tend to get a little higher. So if we do get this pullback, I'm expecting somewhere to test around the 112s down to the 107 for Bitcoin. So ideally, a bit of a shallow move here, and then it continues to climb higher, as we've seen with October, November, December, for this composite cycle. So you can see October, November, December running up into those highs. 1 month at a time, things are still looking relatively on track here for Bitcoin. The forward returns also looking relatively good. The theory that I've been holding is green July. This goes back to late July, early August, of course. Now we're in mid-September. Red August potentially means a green to a mild correction for September. So the data shows that there's about a 50-50 chance for, well, slightly less. We take off 2025 because it hasn't completed yet. 46, basically a coin flip that we would get a green September. Same deal for a red. Therefore, I don't expect much to happen through September where we would get a big move to the upside. Those big moves are typically reserved for October. You got an 11% last year, 28% the year before, and 48%, 14, 32%, 48%, and even to the downside, some of those big years like 2011. But when you take out the bearish years, which you can do with the forward returns in your indicator suite, you can find that links in the top of the video description as per usual, you can see that when we take out those years, you got a green and a red, and then the rest of the year has been relatively strong, or at least October and November. So consolidation Q3, start to get a good move Q4. Let's have a look at 2020 and 2021. You've got it the other way around here, a green August, red September, but the point is a consolidation for Q3. And then there's been a good run to the end of the year. That was the peak, that was the all-time high. You had an all-time high in October, which was a good run, another all-time high in November, then closed down, and then of course December, that's where the market started to break down. 2017, green August, red September, Q3 consolidation, strong move to the end of the year. You had Q3 consolidation in 2016 before the bull market, strong move to the end of the year. You had 2015, which is the cycle that we're looking at now, green July, red August, very mild green September, which is something that I'm thinking for this cycle, strong move to the end of the year, so on and so forth. 2011, big reds, but it had a huge move to a peak. So in recent times, it's looked relatively similar to what's happening at the moment. Half of the month to go. Let's see if it continues on. Quick reminder, we have the reports coming out this week for the economic report, altcoin report, and Bitcoin report. Link to that is also in the video description. So moving on to the economy, starting with the sentiment, the AAI, which came out on the 10th, so end of last week or mid last week in September. You can still see that the market, so the traditional market, is still looking relatively bearish. Another reason, in my opinion, why I think we still have further to go in this Bitcoin cycle. And I make the distinction between Bitcoin and cryptos. I don't know if crypto is going to continue to pump with Bitcoin if Bitcoin kept going, but I'm just going to make the distinction here, just talking about Bitcoin, because it's the largest market cap cryptocurrency. Lots going on there with ETFs and treasury companies and so on and so forth. But looking at the market sentiment for TradFi, S&P 500 and so on, they are still very bearish, almost 50% when using this sentiment survey. 50% bearish, that's this number here, 28% bullish. Meanwhile, week after week, new all-time high prices for the S&P 500, and last week a new all-time high weekly close. So I'm on the weekly chart here. Our red line in the background is the 5-year cycle going back to the COVID collapse. So I think there have been similar events to the market. This one here, major black swan. The tariff crash, you could argue that it's a black swan. Either way, it had a significant impact on the market price very quickly, similar to the COVID collapse. And we've basically, well, the market's been rebounding similar to the COVID collapse and then rebound as well. So we're still now running into this consolidating move that the cycle says is coming up for September, October, and into November. We've just pushed to a new fresh high again. So when we take a look at it on a line chart, you can see the higher lows continuing to form, the higher highs, and the 5-year cycles also suggested higher highs and higher lows. Now the US dollar has continued to fall, still sitting around 97, hasn't broken down yet from the lows at 96, still testing the upper band around 100. So this grinding price range, basically 5 months now, it's been in this range between 96 and about $100 here for the US dollar. And the longer term, I'm still watching this to break the lows, as it's been part of our 18-year cycle makeup, second half of the cycle. So the second half expansion for the real estate and the economies continued higher. We expect the US dollar to go down, and that's exactly what has been happening. So I think longer term, we got further to go. It has broken down through that period, just needs some time to consolidate before I think the move continues lower. With this weakness of the US dollar, the underlying weakness, at least the perceived weakness in the economy, we've obviously seen gold rise to new fresh prices. That has been a new all-time high price, new all-time high weekly close on gold, and the same thing for silver. Not a new all-time high price, but a new fresh high. This is a 14-year high. Got to go back to 2011. This time in 2011, actually August, 14-year high, silver and gold are higher. I'm going to make a video in the future. Let me know in the comment section if you want to see more about gold and silver. The last time I did a dedicated video on that, it wasn't received overly well, only 20,000 views compared to the normal 30 to 40,000. So I'm not sure if the majority of people want to see the metals themselves, but I think there's a pretty interesting rally coming up and correction, like we can see in past, as the market cycle runs into a peak, as we see real estate prices peak and as we see the stock market prices peak. So if you want more on the metals, dedicated videos, drop emojis with gold and silver, whatever emoji you want to choose there as well in the comment section, and I'll heart those so I know there's a few more. On the altcoin charts, USDT dominance, a good sign here for the bulls, for crypto and Bitcoin, getting my words out here. It's been declining since we hit that double top at 4.6%, but still roughly 2 months in this zone between 4 and 4.5% for the USDT dominance. And as I said in the intro, we've basically been seeing a run from Bitcoin to strong alts. Ethereum, of course, has been taking a lot of those gains as well over the last few months. And then when we see a local top form, boom, comes all the way back into USDT. And that's basically been this move. USDT down, crypto's up, USDT up, crypto's down, USDT down, you get it, so on and so forth. Rinse and repeat, rinse and repeat. Some keep moving higher into stronger positions, meanwhile others keep putting in lower highs and fall, lower highs and fall. That's why I think this cycle has been mostly about the trading and not the same as previous cycles. So we saw significant moves down for USDT in those cycles quite quickly, whereas so far from 2024, it's basically been a grind with lowering highs, and we're just seeing that money flow out into the altcoins that most people want to be in. Ethereum, Solana, XRP's had a relatively good run, Hype, things like that. And the others keep booming up and then busting, coming all the way back down. So USDT dominance still looking like it wants to break down, just needs a bit more time here. Same deal with the Bitcoin dominance. I think there is a bit of time for it to run up to the upside. It's been holding 57.7% relatively well over the last 4 weeks, suggesting that there could be an upside here for Bitcoin dominance. So more money to flow back into Bitcoin, potentially from Ethereum, as I'll show you in just a sec. And then looking for somewhere around that 59 to 60% dominance before we see a correction lower. I still think there is going to be more weakness in the dominance, meaning there's going to be some strength for altcoins. But in the short term, it seems like there's some more upside here, especially for September. Now, 2 major points. Hit the like, subscribe to the channel if you're new. These are going to be 2 big ones that we keep following. First is the crowdedness for Ethereum. The blue line, crowded speculators, huge levels of longs from large speculators into ETH as we approach 4,700. So a lower high has formed for ETH USD. Meanwhile, the speculators have gone absolutely long and it's just not pushing higher. Whereas the commercials, which are generally on the right side of the market, have continued to crowd short. So who's going to win the battle here? History would suggest that the commercials are going to win and the large speculators are going to lose yet again. That's the first thing. You can see lower highs at the minute. But on the ETH BTC chart, this white line that I've got in the background hits every single September. So you can see September 2023, September 2024, September 2022. You get the idea. Every time you see a vertical line here is September. This suggests that September of ETH versus Bitcoin, so the strength of Ethereum against Bitcoin in September for that month has never been strong. Could this be the first month to change that? Maybe. But according to history, you can look at September, go at around 4 of the bars, because that'd be your 4 weeks for September. Never strong. 2024, never strong. 2023, down. 2022, down. 2021, even leading into this peak, that was also down. 2020, down. 2019, the only time coming out of the low, so not always, there's one, but it's still very, very weak around this low point, and then October had the weakness, and then November, the weakness, then December, the weakness. So September had a rally out of a very long decline, and then more weakness. So there's one opportunity here in the last 10 years, and it was quite weak. This could be that time again. Go back to the following year, 2018, weak, 2017, weak, 2016, weak, and 2015, weak. So it doesn't look like it's a time that Ethereum really shines against Bitcoin. And I think that's an important time to pay attention to this chart right now, ETH versus BTC, for this short term, because after that short term, there is a very strong chance that ETH does go on another run. You can see 2021 dropped from 2020, nice run in 2021. Then you've got the 2019, and then it still started to run there in 2020. The dump, 2016, nice big move in 2017. Here's late 2017, and that run into late 2018. We know the Bitcoin topped in 2017, Ethereum topped in 2018. So there's a good chance after this pause that we see some good strength there for Ethereum. So there are a couple of the big ones. Very, very heavy on the longs, even though the chart's suggesting there is going to be some time here for ETH to consolidate the move. I don't think it's going to collapse. I don't think it's over. Even if we saw the corrections here for ETH, still not looking too bad. You can see from the top to the 50%, roughly 28%, 30% there, and back to some of these levels around 20%. So pullbacks, okay. Pullbacks can still be healthy at this stage. I think ETH has got further to run. I just think it's time to be cautious and just wait for the market to suggest what it wants to do next. Speaking of next, the altcoins are pushing a little bit stronger here compared to what ETH is. And this is looking at the total market cap, excluding Bitcoin and ETH. So primarily your Solanas and everything else there, which has hit a new second highest weekly close in history and just hit a new all-time high price. So just marginally higher than the November top as well, suggesting there is some strength to come. But let's just hold the horses here as the market hasn't closed above those highs and just play it safe. You got higher highs, higher lows, trend is up, just keep following the trend. So total 3 looking good. Sol has broken those highs, got past the 50%. You can see here, 3 of those nice strong weekly closes, 50% level, 1, 2, 3, as I talk about many times, get the 3 closes, and then a nice move higher. $250 high, the next level's at around $265. So that's the previous old all-time high back in 2021. The test in November, and then obviously we had that $295 top in January. So Solana's are really trying to grind this level higher. Just be careful of this larger bar with a big move while we're just seeing a slight weakness in the background of other charts. Here it is. Here's your others chart. Total crypto market cap, excluding the top 10. So it's found the resistance at the level that we're watching, the midpoint, 8.3%, slight pullback, but it just seems, again, just like a short-term pullback. It hasn't broken beneath the previous breakout levels around that 8% and still holding above 7.7. So it's a slow grind higher for many of the stronger alts, and Hype has been one of those alts that is currently outside of the top 10, broke higher, got to $57, pulled back over the last few days from that high. Might be asking, is that the 3 days down? You've got 1, 2, 3 days down. The important part here is to test it on different asset classes as well if you're using that rule. Do note, Hype USDT has hit the $56 level, $55.80 of the 50% extension of the range that we were watching that was on the weekly chart. So maybe we do get a slight pullback here. Time to pause, consolidate before the next moves higher. That's essentially what I'm seeing across the markets. Hit the like, subscribe to the channel. Reports are coming out this week. And if you want to check out the indicator suite, also that is in the video description as well. Thanks again, guys. I'll see you back here at the next video. Let me know if you want more gold and silver, leaving your emojis down below. And yeah, we'll be back for another update. Cheers.